Hello all and welcome to the market update from 29th of April to 3rd of May 2024. So let's start with the world economic news. China came out with the S&P Global Manufacturing PMI number, which rose to 51.4 in the month of April from 51.1 in the month of March, marking it the fastest growth in the last 14 months. This shows that the Chinese economy had started expanding in terms of manufacturing, as above 50 number indicates that there is a positive signs of manufacturing being increased. Fed came out, kept their rate of interest unchanged. The two major takeouts from this rate unchanged were the Fed Reserve Chair Jerome Powell signaled that he didn't see any interest rate hikes happening in the following year. Also, he signaled that the Fed would take longer to cut the rates, which meant that we might not see rate cuts happening any soon, as were being expected in the second half of this year. Coming on to the US 10-year Treasury bond yields, when we look at the Treasury yields after being spiked, coming close to 4.75, cooled down a bit to 4.5, but still it's at a level of 4.5. So still this number has to be seen if it would impact. On the how the markets on the global front performed, we saw that the markets were in the US were flattish, close to 1% increase. European market was down or close to 1% increase. Indian market was up in the week by 0.2%. We can see that they were also flattish, whereas the other markets also were flattish. The market numbers remain flattish because the US the Middle Eastern crisis, Middle East crisis actually subsided, but there were fears that the oil and the Treasury, US Treasury bond yields would rise, but they had started to ease out. So this data would be further need to be evaluated in the further coming week. Oil, as I said, has eased down a bit and has come to $82.78 a barrel, reaching above in the last few weeks. It was above $90 a barrel. For the week, we saw that the FIs were again net sellers, selling about 2,115 crore worth of equities. DIs were net buyers, buying 4,164 crore worth of equities. We saw that the buying in the week was on a lower side, even though the markets ended on the positive, but the overall strength in the market was not there. Gold has corrected again, and it has come down by 1.25% to close at 70,677 per 10 gram. Now we look at the market performances. As we saw that there was not much strength in the market, though the Sensex closed close to 0.2% positive. Nifty Bank was 1.5% positive. Midcap was 0.6% positive for the week. Even the Nifty Midcap was down, was flattish at closed down by 0.27%. We saw that the Nifty had reached its did touch a highest in the week, but corrected in the last. We will see that more, discuss more that in the candle charts. So, if you come to the valuation front, Nifty trailing PE have reached 21.9, which is above 2 years average and below 5 years average, which is fairly valued. Nifty Midcap 150 trailing PE is at 35.9, which is close to 2 years and 5 years high, which is significantly high. If you look at the small cap trailing PE, it is at 27.3, above 2 years average and just on 5 years average, worth of 5 years average. So overall market, as indicated by the Buffett indicator, which is the total market cap to GDP, is still fairly valued. We are not seeing that the markets are significantly overvalued. The Indian bonds or 10-year bonds traded at 7.149% yield. The yield curves in the short term, mid term, and the long term maturities are still flat, indicating that there's not much movement happening in the market in the terms of yields. Now we move to the candle charts. If you see that on the daily basis, Nifty on the daily basis, Nifty made a high of 22,794. However, it reversed those gains on its gains, forming a big red bearish candle, engulfing candle actually. However, if we look at this on the weekly basis or the weekly chart, Nifty made yet another doji candle like the previous, which it has been making it for last few weeks, which show that Nifty is show this there's a consolidation that is happening in the Nifty in the range of 21,800 to 22,800. So as I discussed in the FIS and DIS data, there's a bit of weakness happening in the markets that we are seeing right now. On the mid-cap front, if we move to the daily charts, daily mid-cap shows that for the last 9 to 10 sessions, the Nifty mid-cap was in the positive zone. It was moving up, but in the last Friday session, there was a big red engulfing candle that has formed at the top, indicating there's a possible chance that we in the next week will see weakness in the Nifty mid-cap. Moving on to the mid cap on the weekly basis, the chart has formed a doji candle at the top, almost like a shooting star, which could also mean that there could be a red candle. There could be a if this is confirmed by a red candle in the next week, we will see a mid cap coming down. On the small cap front, even the small cap was for last 4-5 session in the 4-5 session it was moving up. Then we saw that there was a red candle forming for last in the previous last 4 session, which is again followed by a big red candle in the last session on the daily basis, which shows that the market on the small cap front is still on the bearish side. On the weekly candle, the market is forming a candle which is like a hammer, which could be possible downturn, but still the data on the small cap front is still very ambiguous as of now. We need to see the space in the next few weeks to understand how the small caps are behaving. That was all from my side. I hope you like the update. Please share, subscribe, and like our videos so that you could get the